What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you like, share, a comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. As a reminder, don't forget to hit that notification bell so you get all the latest alerts on all the videos and content that we drop on the Credit Plug channel. So for today's video, we're going to be doing another CDFI review. So that's Community Development Financial Institution. So several weeks ago, I posted a video on one of the newest SBA loan programs. That's the Community Advantage Recovery Loan Program, otherwise known as CARL. I'll post a link in the description of the video for you to go check that out, where we go over some of the specifics of that particular program. But in the course of researching different community advantage lenders within Carl, I was able to come across a good number of institutions that offer non-SBA loans. So this particular institution that we're covering today is actually one of the community advantage lenders that's among the few who are administering the Carl loan program backed by the SBA, which expires, or the deadline rather, ends September 27th. So there's a couple days left in order to get your application in. But anyways, this particular institution is the West Central Development Corporation, otherwise known as Anchor Capital, which is the trade name. So they're a certified SBA lender, as well as certified through the Department of Treasury as an economic development agency. And so their main initiative is to support American communities by providing innovative financing initiatives. Now, they currently only operate in 4 select states: Ohio, Florida, Michigan, and Indiana. So, on some of the previous videos we did, there were some subscribers who commented, when are we going to do CDFI for your area? So, this is, maybe one of them, but we'll do additional reviews of a host of other CDFIs. But anyways, Anchor Capital offers some innovative programs. So they have three basic lending programs for small businesses. One is the small loan program. So that's loans between 15,000 up to 50,000. Then there's the Community Advantage program, loans from 50,000 to 250,000. And then there's the Real Estate Advantage loan program with real estate loans from 250,000 all the way up to 5.5 million. So as I mentioned, there's 4 states where they actually do provide business loans to: Ohio, Florida, Michigan, and Indiana. Now, a couple prerequisite things to be on the lookout for in terms of their qualifications, right? And this is at a minimum. So, no current pending criminal indictments or charges, no bankruptcies within the last 5 years, no back child support, and you must be a U.S. citizen or resident. Also, no open tax liens. So just keep that in mind before you consider this. So that's at a basic level. But let's go jump over to their website, and I'll run through some of the specifics of their 3 different loan programs. So I'll see you over there. All right, so here we are on the West Central Development Corporation website, otherwise known as Anchor Capital. So down here below, we have the 3 different loan programs: the Small Loan Advantage, the Community Advantage, and the Real Estate Advantage. Now, let's just first start off by looking at the Small Loan Advantage. Loans from 15,000 to 50,000, variable interest rate of prime plus 2.25, and then payment terms up to 7 years, no prepayment penalty, and a 3% application fee, which is kind of high. For-profit businesses, you must be in Ohio, Michigan, Indiana, Florida. Personal credit score of 625. Now, I don't have the data points on which bureau they're pulling, so let's just assume 625 across the board, and an average SBA score of 185. So there's what's called the FICO SBSS, which is the FICO Small Business Scoring Service. This is a composite score that looks at your personal credit and financials, as well as your business credit and financials. They don't really disclose what the formula, what the different features are, components of that particular score. But you can get your score if you do have an upgraded version of NAV. NAV will give you your FICO SPSS, and that's what's typically used with SBA loans and other commercial loans. They look at your FICO SPSS. So 185 is the average score. So these are the two criteria that you're going to want to be at. And then in terms of the rates, 6 to 8.5%, fees of 1,500, and then they just have some comparisons of other alternatives, right? Merchant cash advance, of course, you're going to be paying exorbitant interest rates, 24 to over 100% in much lower terms. So just basically giving you some comparison. Now let's talk about the Community Advantage program from 50,000 up to 250,000. Variable interest rate of prime plus 2.75%, which is a little bit higher, about half a percentage higher than the small loan program in repayment terms up to 10 years. So generally, when you're having longer terms, you're probably going to pay a slightly higher interest rate just because the longer you owe the bank or financial institution is the more risk for them. So they have to account for that risk by giving you a higher interest rate for longer terms. This one though has a 2% application fee versus a 3%, and again, besides that, all the same criteria in terms of eligibility and if you qualify, very similar rates. So that's about it with the Community Advantage. Now let's talk about the Real Estate Advantage. Now, one of the differences between the Real Estate Advantage and Community Advantage and Small Advantage, of course, the amount that you can get funded for is a minimum of 250,000, 250,000 up to 5.5 million. But this is for real estate and equipment only. So this is the acquisition of real estate. Now, here there's a fixed interest rate with 10, 20, and 25-year repayments. You're going to have to come to the table with 10% down. So let's say you needed 250,000. You'd have to provide a what's called a owner equity capital injection of 10% down. So that's one thing to keep in mind. Now, another difference is that this one is not available in Florida. It's only Ohio, Michigan, and Indiana, as you can see right here. But the other two programs, Florida, you can get the Community Advantage and the small business loan. And so besides that, it's going to be the same qualifications. Now, in terms of the interest rate is going to be lower, right? One of the reasons why the interest rate is going to be lower is because whatever real estate or equipment is going to be collateral for that loan. So, in case of default, that securities, I mean, that collateral is essentially the real estate. So, because of that lower risk, because there's collateral backing that loan, then, it's going to be a lower interest rate. And so 5.65 fixed 20 years, terms of 20 years, and fees of 3.5%. Now, when you're looking at 250,000, 3.5% can definitely be somewhat substantial. So when you're looking at 250,000, I mean, you're looking at over $10,000 in fees, and obviously it can go up the higher the loan amount. So that's just one thing to keep in mind. But overall, these are some pretty decent loan programs for you to consider. So if you're in Florida, Ohio, Michigan, Indiana, then you could definitely check these out. I just wanted to share this with you. So if there's anyone who has any experience or data points with West Central Development Corporation, otherwise known as Anchor Capital, definitely let us know in the comment section down below. And until next time, take it easy, and we'll talk to you soon. Peace.